Welcome to the Deep Dive.
Mm-hmm.
We analyze your source material to help you make informed decisions.
Okay.
Today, we're looking at Comcast
Okay.
and whether it's a good fit for your portfolio.
Sounds good.
We'll be using information from their Wikipedia entry,
Okay.
financial reports,
Mm-hmm.
and stock analyses to get a comprehensive view.
Yeah, it's important to look at the full picture
Right.
when considering an investment like this.
Right.
Comcast has a long
Yeah.
and a complex history.
Yeah.
So understanding its past, present,
Right.
and future potential is key.
Okay. So let's start with a brief overview.
Okay.
Comcast has been around since 1963,
Wow.
going public in 1972.
Okay.
They've grown significantly through acquisitions,
Mm-hmm.
most notably AT&T Broadband in 2001,
Right?
NBC Universal in 2011,
Yeah.
and DreamWorks Animation in 2016.
Yeah, these acquisitions have made them a dominant force
Yeah.
in the media and telecommunications industries.
Yeah.
They're currently the fourth largest
Wow.
broadcasting and cable television company worldwide by revenue,
Okay.
the third largest pay TV company,
Mm-hmm.
and the largest home internet provider in the U.S.
Right. Their financial performance reflects this dominance.
Yeah.
Their Wikipedia entry
Mm-hmm.
shows their revenue grew
Okay.
from $24.966 billion in 2006
Wow.
to $121.4 billion in 2022.
That's huge.
Yeah, that's nearly a five-fold increase
Wow.
in less than 2 decades.
And their workforce has expanded along with their revenue,
Right.
growing from 90,000 employees in 2006
Okay.
to 186,000 in 2022.
Wow.
This highlights their significant impact,
Yeah.
not just on the media landscape,
Right.
but also on the economy
Yeah.
as a major employer.
Their attempted purchase of Time Warner Cable in 2014,
Okay.
though unsuccessful,
Right.
further demonstrates their ambition to expand their market share.
While that particular deal faced regulatory hurdles,
Right.
Comcast continues to make strategic acquisitions.
Mm-hmm.
More recently,
Yeah.
they acquired Level,
Oh.
an American-Israeli cybersecurity startup, in 2022.
This move suggests their recognition
Mm-hmm.
of the growing importance of cybersecurity,
Right.
particularly given their role as a major internet provider.
And in 2023,
Right.
they sold their stake in Hulu to Disney,
Wow.
allowing them to focus resources on their own streaming platform, Peacock.
Interesting.
This decision underscores
Yeah.
the ongoing shift in media consumption
Mm-hmm.
towards streaming services.
Speaking of adapting to industry changes,
Mm-hmm.
Comcast also launched Xfinity Stream Saver in 2024,
Okay.
a bundle that includes Peacock,
Mm-hmm.
Netflix, and Apple TV Plus Painter
Okay.
for their internet and TV customers.
Okay.
This strategy aims to capture a wider audience
Mm-hmm.
in the evolving cord-cutting landscape.
Yeah, these recent acquisitions
Right.
and product launches
Mm-hmm.
show that Comcast isn't just resting on its past successes.
Right.
They're actively seeking ways to innovate
Yeah.
and maintain their position
Mm-hmm.
in a rapidly changing market.
Now, to assess whether Comcast is a good fit for your portfolio,
Okay.
let's dive into their financial health.
Okay.
Starting with their valuation,
Okay.
the Zacks data you provided offers some key insights into this.
The Zacks Value Scorecard
Okay.
gives Comcast a B rating,
Mhm.
suggesting it might be reasonably valued
Okay.
compared to its peers.
Okay.
This scorecard considers metrics such as the cash price ratio
Right.
and the EBITDA.
The cash price ratio for Comcast is 0.06.
Okay.
Can you explain what that tells us about their financial standing?
So this ratio
Yeah.
indicates how much cash a company has
Mm-hmm.
relative to its stock price.
Right.
A higher ratio
Okay.
generally suggests
Yep.
a healthier financial position.
Right.
Comcast's ratio of 0.06 is considered decent.
Okay. And what about the EBITDA,
Okay.
which stands at 7.28 for Comcast?
So EBITDA
Right.
stands for enterprise value to earnings before interest, taxes, depreciation, and amortization.
Right.
It gives a more comprehensive view of valuation
Okay.
than just the price to earnings ratio,
Okay.
as it factors in debt and cash.
Okay.
Comcast's 7.28 is within a reasonable range,
Okay.
indicating they are not significantly overvalued.
Another key metric
Okay.
from the Zacks data is the momentum scorecard,
Right.
where Comcast receives an A grade.
This signifies that
Yeah.
Comcast is experiencing positive price and earnings momentum,
Right.
potentially indicating future growth.
Okay.
However,
Yeah.
it's crucial to consider all aspects
Yeah.
before making an investment decision.
Right.
Let's move on to another important factor for investors.
Okay.
Comcast's dividend policy and share buybacks.
The information you provided indicates that Comcast has a history of paying dividends
Okay.
and buying back shares,
Right.
which are generally seen as positive signs for investors.
That's right.
Okay.
These actions often demonstrate a company's confidence in its future earnings
Right.
and a commitment to returning value to shareholders.
Okay.
Comcast's current dividend yield is around 3%, which is competitive,
Yeah.
especially in today's market.
Okay.
They've also announced plans to repurchase shares
Right.
using the proceeds from their Hulu sale.
This share buyback strategy could potentially increase the value of existing shares for investors.
Right.
To understand if Comcast aligns with your investment goals,
Okay.
let's weigh the pros and cons of owning their stock.
On the positive side, Comcast holds a dominant market position,
Right.
boasts a strong track record of financial performance,
Yeah.
and has a history of rewarding shareholders through dividends and buybacks. Their recent strategic acquisitions
Right.
and product launches
Yeah.
indicate adaptability to industry shifts, which is crucial in the evolving media landscape.
But no investment is without risks.
Right.
What are some potential downsides or concerns to consider with Comcast?
One of the biggest challenges for Comcast
Okay.
is the intensifying competition
Right.
in the telecommunications and media landscape.
Yeah.
Cord cutting continues to impact cable providers, and the streaming market is becoming increasingly crowded.
Additionally, Comcast has faced criticism
Right.
regarding their customer service and lobbying efforts. These are factors that some investors might find concerning.
We also need to consider ESG factors, which stand for environmental, social, and governance. These are increasingly important for investors who prioritize ethical and sustainable business practices.
From the information you provided, Comcast has published reports on their efforts to reduce their carbon footprint, indicating some commitment to environmental sustainability.
However, they have also drawn criticism for their political contributions, particularly their support of certain political action committees.
Okay.
This is a complex issue that investors need to assess
Right.
based on their personal values and investment philosophy.
Ultimately, deciding whether Comcast is a good fit for your portfolio requires careful consideration of all these factors. Their financial performance, market position, and growth potential are compelling.
Right.
But the evolving media landscape, competition, and ethical considerations are also important to weigh.
Before we wrap up our analysis of Comcast, let's discuss a few additional points that weren't explicitly covered in your provided materials,
Right.
but might be relevant to your investment decision. One key aspect is their unique position as both a content provider and a distributor.
Yes. Owning major networks like NBC and cable channels like USA, while also being a dominant internet provider, raises potential conflicts of interest, especially as streaming gains prominence.
Exactly. It's crucial to consider how they might prioritize their own content services over competitors in this evolving landscape.
Another area to consider is the regulatory environment. Comcast's attempted acquisition of Time Warner Cable was thwarted by regulatory hurdles, demonstrating the significant impact government policies can have on their growth strategy.
Ongoing debates about net neutrality and antitrust concerns could also shape Comcast's future. Changes in these areas might affect their pricing, content offerings, and even their ability to make acquisitions.
While Comcast has a strong track record, these uncertainties underscore the need for ongoing monitoring and evaluation.
Making informed investment decisions requires staying up to date on market trends and industry developments.
Speaking of staying informed, our YouTube channel offers more in-depth analysis on a variety of companies and investment strategies.
We encourage you to check out our channel for additional insights. We also welcome your suggestions for future deep dives.
Okay.
Let us know in the comments which companies you'd like us to cover next.
Sounds good.
For now, let's shift back to the specifics of Comcast.
Okay.
We've covered a lot of ground.
Right.
But it's worth revisiting a few key aspects.
Okay.
One is the price-book ratio.
Right.
Which we haven't discussed in detail yet.
Right. That's another important valuation metric from the Zacks data.
Right.
Comcast's price-book ratio sits at 1.47.
Okay.
What implications does that have for potential investors?
So the price-book ratio essentially compares a company's market value to its book value, which is the value of its assets, minus its liabilities. A ratio above 1 suggests the market believes the company is worth more than its accounting value, often indicating positive expectations for future earnings and growth.
Right.
In Comcast's case, a ratio of 1.47 is a positive signal. It suggests the market sees value in Comcast beyond its tangible assets, perhaps reflecting confidence in its brand, market position, or growth potential.
So taking all these valuation metrics together, what can we conclude about Comcast's financial attractiveness?
Based on the information you've provided, Comcast appears to be in a relatively solid financial position. The Zacks data paints a picture of a company with a healthy cash flow, reasonable valuation, and positive momentum. Of course, valuation is just one piece of the puzzle. We need to consider the broader context of their industry, their strategic decisions, and the potential risks and opportunities they face.
Absolutely. And one area that deserves further attention is Comcast's commitment to ESG principles, specifically their social impact. We've touched on their environmental efforts and the controversies surrounding their political contributions. Could you elaborate on the implications of these factors for investors who prioritize ESG principles?
Certainly, ESG investing has gained significant traction in recent years. As investors increasingly seek to align their portfolios with their values, Comcast's efforts to reduce its environmental impact, as evidenced by their carbon footprint reports, demonstrate a degree of commitment to sustainability. However, their political contributions, particularly to organizations whose views may not align with those of all investors, have raised concerns. This presents a dilemma for investors who prioritize social responsibility.
It seems that assessing Comcast from an ESG perspective requires careful consideration of both their positive actions and the areas where they face criticism.
Precisely. There's no simple answer. It depends on each investor's individual values and how much weight they place on different aspects of ESG performance. For some, Comcast's environmental initiatives might outweigh the concerns about their political spending. For others, the opposite might be true.
This highlights the importance of conducting thorough research and aligning investments with one's personal values and risk tolerance.
Exactly. There's no one-size-fits-all approach to investing, especially when considering ESG factors. It's crucial to gather information from various sources.
Understand the complexities involved and make informed decisions that align with your overall investment philosophy.
And as we discussed, the media and telecommunications landscape is constantly evolving. New technologies, shifting consumer preferences, and regulatory changes can all significantly impact companies like Comcast.
That's why it's essential to stay informed and continuously monitor your investments. Past performance is not always indicative of future results. And the factors that contribute to a company's success can change rapidly.
So even though we've covered a wide range of information about Comcast today, it's crucial to recognize that this is just a starting point.
We encourage you to delve deeper into the aspects that resonate most with you and your investment goals. Conduct further research. Explore different perspectives. And consider the long-term implications
of your investment choices.
Remember, investing is a journey, not a destination. It requires ongoing learning, adaptation, and careful consideration of various factors.
Right.
Including financial performance, market trends, and your own personal values.
And as always, we're here to provide you with the information and insights you need to navigate this journey effectively.
Okay.
Be sure to check out our YouTube channel for more in-depth analysis on a variety of companies and investment strategies.
We welcome your feedback and suggestions for future deep dives. Let us know in the comments which companies you'd like us to cover in future deep dives.
Now, before we conclude our analysis of Comcast, let's touch on a few additional factors that might influence your investment decision, even though they weren't explicitly covered in the materials you provided.
I'm intrigued. What aspects are you thinking of?
One crucial factor is the potential impact of emerging technologies on Comcast's business model. For instance, the rise of 5G and fiber optic internet could disrupt their cable-based internet services.
That's an important point. Technological advancements can create both opportunities and threats for established companies. How Comcast adapts to these changes will be critical to their future success.
Precisely their ability to innovate, invest in new technologies, and anticipate shifting consumer demands will determine their ability to maintain their market position in the long run.
Another element to consider is the evolving regulatory landscape. We've already mentioned the failed Time Warner cable acquisition and the potential impact of net neutrality debates.
Yes, and the regulatory environment can shift quickly, creating both challenges and opportunities. For companies like Comcast, for example, changes in antitrust regulations could either restrict or enable their ability to make acquisitions and expand their market share.
It seems that staying informed about regulatory developments is crucial for anyone considering investing in Comcast.
Absolutely. Regulatory changes can have a significant impact on a company's profitability and growth prospects. So it's essential to factor these potential risks and opportunities into your investment analysis.
So while Comcast's current financial performance and market position appear strong, the long-term outlook depends heavily on their ability to navigate these evolving technological and regulatory landscape.
Exactly. Investing in any company requires a forward-looking perspective, understanding not just where they are today, but where they are heading in the future is crucial for making informed decisions.
And that's where our YouTube channel comes in. We provide regular updates and in-depth analysis on a variety of companies and industries, helping you stay ahead of the curve.
We encourage you to subscribe and leave a comment, letting us know which companies you'd like us to cover in future deep dives.
For now, let's transition back to the specifics of Comcast and delve into one final area that deserves attention. We've discussed their financials, their market position, and even touched on ESG factors. But what about the human element? Comcast has a reputation, fair or not, for certain customer service practices.
That's an important aspect to consider. While not directly reflected in the financial data, customer perception can significantly impact a company's long-term success. Negative experiences can lead to churn impacting revenue and growth.
The sources you provided don't delve deeply into this. But it's worth noting that Comcast has faced criticism over the years for issues like billing disputes and service outages.
It's true that customer service is an area where they've had challenges. However, it's also worth noting that they've made efforts to improve in recent years. Investing in technology and training to enhance the customer experience.
It's a dynamic situation that investors should monitor. A company's ability to attract and retain satisfied customers is crucial for sustainable growth.
Absolutely. And in today's interconnected world, online reviews and social media commentary can quickly amplify both positive and negative customer experiences, influencing public perception and potentially impacting investor sentiment.
So as we wrap up this deep dive into Comcast, it's clear they are a complex and multifaceted company. Their dominance in the media and telecommunications landscape, their financial performance, and their commitment to innovation are all compelling factors for investors.
However, they also face challenges. The evolving media landscape, intensifying competition, and ethical considerations require careful evaluation. Their track record with customer service and the potential impact of emerging technologies and regulatory changes are additional factors to weigh.
Ultimately, deciding whether Comcast is a good fit for your portfolio is a personal decision.
Right.
Based on your individual investment goals,
right.
risk tolerance, and values.
The information we've discussed today should provide you with a solid foundation for making that decision.
Okay.
Remember, thorough research, careful consideration of various factors, and ongoing monitoring are key to successful investing.
If you're looking for more in-depth analysis and insights on Comcast or other companies, be sure to check out our YouTube channel.
We regularly share deep dives, market updates, and investment strategies to help you make informed decisions.
We also encourage you to join the conversation.
Yeah.
Let us know in the comments section what stocks you'd like us to cover in future episodes.
Until then, happy investing.